Hello everyone, this is Chad Stayskull with Eagle Wealth Management with our educational economic update for May 2017. In this month's video, we're going to talk about some of the major headlines that influenced markets in April, and also about a few of the first quarter reports that we found. We hope this information offers some insight into what these developments mean for you as an investor. To start off, data for consumer spending, which accounts for more than 2/3 of U.S. economic activity, was included in the first quarter Gross Domestic Product report. It was released on April 30th. It showed consumer spending weakening to the slowest pace we've seen since the fourth quarter of 2009. The economy grew at less than 1% in the first quarter, which is its worst performance in 3 years. The Personal Consumption Expenditures Price Index, or PCE as you might have heard of it, which excludes food and energy, slipped by 0.01%. This was the first drop in this index since September of 2001. In the 12 months through March, the core PCE price index increased 1.6% after advancing 1.8% this past February, which was still below expectations. Going on to the major U.S. stock market indexes, they posted an advance in April of about 1%. The S&P and Dow posted their 5th positive month out of 6, while the NASDAQ recorded its 6th straight month of gains. Most of those gains came in the last week of April, when stocks posted rapid rallies as corporate earnings season kept revealing strong performances from top global companies. The first quarter earnings season has been strong so far. More than 75% of companies were surpassing profit estimates, and about 70% were beating sales forecasts at the end of April. Experts say that the number of companies topping profit and sales estimates for the first quarter was above the 5-year average. So, with that negative and positive, you might be wondering, how are quarterly profit earnings so strong while our economy expanded in the first quarter of this year at its slowest pace in over 3 years? Well, the answer is robust global growth is making up for the lack of domestic activity. Analysis shows that the more business a U.S. company does overseas, the better its results. About 46% of S&P 500 sales overall come from foreign markets. S&P companies that earn more than half their revenue overseas are seeing earnings growth that is twice the rate of companies that do mostly domestic business only. So in the coming month, we're expecting more key economic data to be released, including the U.S. jobs report. Additionally, Federal Reserve Policy Making Committee will meet in early May, and it's expected it will hold rates steady. And while lawmakers reached an agreement on April 30th to keep the government funded until the end of September, the House and Senate must still approve the bipartisan pact sometime in May. So there's still lots to watch going forward, and we promise to stay on top of these changes as best we can and keep you apprised of how they will affect your plan. Please remember that nothing we talk about here is a recommendation. If you'd like to discuss your personal financial situation, please feel free to give us a call at 541-330-0220. We're happy to talk. And once again, this is Chad Stayskull with Eagle Wealth Management signing off for the month of May 2017. Take care.